We're looking at the top 6 lithium exposed companies on the ASX over the last quarter. They're up 100%, which is a solid movement, particularly in the light of the index now being under the 50-day moving average, telling us that the index is down, the ASX is down, but these small, mid, micro caps are actually shooting the lights out and putting on exceptional performance. So what is it that they have in common? And it's beyond just lithium. And this is different to what we normally see with top sixes, particularly in commodities. We normally drill down and find the pure plays. Those with the most pure exposure tend to run hardest when the commodity's running. But lithium isn't actually running high like gold and a fair few other metals right now, except lithium companies are performing well. So the question begs, what do they have in common, and why is the market, why are investors getting behind these companies so much? That's what we're going to dig into. So we look broader afield, we look to the US because that's where a lot of the answers, or where a lot of the stimulus and the catalyst comes from. Think about Lithium Americas. They've surged 95% just last week, the last couple of days, when the US government announced they're having equity participation. Now this sounds familiar because we looked at this with MP Materials a couple of months ago, about 6 weeks ago. They jumped about 50%. They're up a solid amount, and that was after the US, the Defense Department, partnerships with them. So the Trump administration, they're systematically taking stakes in strategic mineral companies. So that's a profound shift towards commodity nationalism. Huge change that we've seen for the last half a century or so. So the 6 ASX listed companies that we're looking at, they've put on exceptional returns. These companies here, we've highlighted the quarterly performances, massive gains. They're up between 106, 187%, and it's not just from the lithium exposure. They've positioned themselves with an intersection of multiple commodity super cycles, or government backing, US government backing. So that is a rare one. We haven't seen that before. When we've been doing this for the best part of 6-8 years, looking at the leading companies on ASX. So that is quite interesting to see that sort of movement coming through from these companies. We'll put the list back on screen for you. Now, the multiple irons in the fire, this is where we see the crossover that's a little bit different. So we've got that government backing, but what's coming from it? Well, all these companies have in common is that they have some sort of lithium undertone. Mineral Resources and PLS, we've added them in there because if you're trading lithium on the ASX, you're probably following these two as well. So they're the reference point. Still decent gains, but the lithium foundation. Then they've got US strategic minerals. So the US government's putting money into rare earths, uranium, critical minerals that are deemed essential for national security. And this fits into the third theme, the geopolitical shifts. So one of these companies has an underpinning or an exposure, a cross exposure to gold. Okay, this is interesting, and this is coming out of some recent research from CommSec, Commonwealth Bank. Post-Ukrainian war, central banks have shied away from US dollars, US deposits, and they've about doubled their exposure to gold, buying gold. So these are bigger, they're not new buyers, but they're bigger pockets or bigger purchases from central banks that we've seen previously or for many years. So that's then flowing in, diversifying away from Western countries. And so as the Western countries prioritize domestic and securing their supply chains, moving away from Chinese dependence, the emerging economies are looking at what happened with the sanctions from Russian-held deposits, US deposits, and the sanctions there being frozen out of them. And the emerging economies have said, well, actually, how about we move towards gold as a defensive position? We know what's happened with gold prices and gold miners on the ASX. So this is that mixture of thematics that we don't normally see in the commodity space. Now we'll drill down to these individual companies and have a look at their performances. Remember, this is the context of the ASX coming down off the highs. And if we're looking at with the opportunity in the market, so we're always looking at momentum opportunities, we see that just on the close was another record day for momentum profile or momentum opportunities on the ASX, being 100%, better than 100% of the days in the data set, and way up here, this blue bar, telling us that there are solid momentum opportunities in the ASX, better than we've had for a year, when the index is actually coming down. So there's that disconnection. Not all traders need to follow the index. Momentum traders, we just find the best companies and get on board. So here they are. We're going to look at them and we'll look at BMM. So I'll move them through so I can toggle through. And let's see if we can lock this one on the screen so that you can still see it. as I toggle through the charts. We've looked at this today with Gary. You're going to see the video. Members get the video today. Others will get it on Friday. So the performance comes to the North American lithium with recent gallium discovery, so the critical semiconductor mineral, where China controls about 80% of the supply. So having them in the US really helps. The recent assays are showing elevated gallium and lithium grades at the Canadian Tango project. That underscores that dual commodity opportunity that we're looking at, and you can see it play out in the share price. Next up, we've got SGQ, St. George Mining. Now, probably the most sophisticated play here. Their primary focus is Brazil's Araxá niobium rare earth project, and that's adjacent to the world's largest niobium producer. So 41.2 million tons of niobium resource. It creates rare earth exposure with Australian lithium as their secondary positioning. So massive skyrocketing share price, 300%, huge move. Threefold move, massive. Then we have Chariot, so CC9, let me move that chart in there for you. CC9, so Chariot Corporation, 130% gain. This is the pure play US lithium strategy. America's largest lithium landholder with Wyoming and Nevada projects. CC9, they benefit directly from the protectionist policies that are coming out of the US. Think about the tariffs, all those tariff wars, Liberation Day, that all plays into CC9's benefit. So the recent drilling extensions, the Black Mountain, validate the scale potential of their project, and you're seeing that play out in the share price as well. Another one that we looked at in the video with Gary Glover just recently. ZNC is the next in the list, Zenith Minerals. So the pivot specialist, what they've done here, they've moved from just the lithium focus, and they've moved into the gold, which we talked about before, with the emerging economies now deploying more capital than they used to into buying gold rather than US dollar deposits. So that's retaining the WA, Western Australian lithium exposure through the Split Rocks project, but they've also got the gold that they've added into the quiver. So it provides lithium optionality with the gold exposure. And then we've got I-88. So I-88, the next performer, rounding out that bottom, massive drop, now under the 200-day moving average, but just on top of it. So this red line here tells us that they are climbing back up. Hard to trade under that 200-day moving average, but they've got the uranium first approach with the lithium as their secondary exposure. So their soil grades have 75,000 ppm uranium, and that's Portland Creek. That represents pure nuclear renaissance exposure, as we've seen that whole shift supplying up the stores. We're not looking at rare earth elements coming from China. We're talking about uranium supplies, where Kazatomprom is a real massive player in the global market, and that's Russian based. So that geopolitical mixture coming through, they do have lithium as a secondary exposure. Then RMX. Big gap up, smaller share price, harder to trade, but Red Mountain, the diversification. So they've got the Nevada lithium projects, plus a Utah antimony acquisition, the defense critical mineral, that's trading near all-time highs at the moment. And then they've got some gold exposure as well. So their early stage, the share price shows it's harder to trade, more tightly held, but does gap up. They do have 3 phenomenal exposures that have huge tailwinds. So that's how it's working at the moment. These are the tailwinds coming through into those lithium leaders that we are seeing on the ASX. And what we'll do for the members who do subscribe and pay, thank you very much for that support. We're going to go down into these details, these companies in a greater detail. We'll have a podcast to that, so they can click on and listen through to it. If you want to follow, you can click subscribe, or you can join and get these reports and access to the member-only videos.